Hi, and welcome to the Forex Market Wrap with me, John Kibler, Head Currency Analyst at Blueberry Markets. We're going to talk about the news this week as well as some of the key points and key charts that we looked at now. Huge news week. We've had lots of developments this week. We had 3 central bank announcements. We've then had an NFP report that has come out way stronger than anticipated. We covered this in a NFP live webinar, so if you want to join me for some live events, head over to the live page on YouTube. That's where we'll be setting up some further live events. Now you can see the RBA hiked interest rates from 3.6% to 3.85%. That was a little bit of a shock to the market at the beginning of the week. Investors really thought that they would hold interest rates at 3.6%, but no, the RBA hiked rates further, looking to try and bring down that inflation rate a little bit more aggressively. We then saw ADP, non-farm employment change, give the hint of a potential rise in non-farm employment change by coming out at 296k ahead of the 148k estimates, and that was quite an interesting thing to see ahead of the FOMC federal funds rate. The federal funds rate rose to 5.25% from 5%, and the Fed were talking about potential pauses to come. However, they did highlight that the labour market could be where the problems lie. Now, that is exactly what we saw after the ECB also hiked interest rates from 3.5%, 3.75%, which has kind of gone under the radar this week in terms of, if we look across the board, everything was really focusing on what that NFP would be, and it was a bit of a shocker. We saw average hourly earnings jump to 0.5%. Forecasts and previous were 0.3%. The non-farm employment change, which was expected to come in at 181 or 185, came in at 253. So a big jump, or a big miss in the numbers there, and unemployment rate fell to 3.4% as well. So very interesting week in terms of news. What do the Federal Reserve do next? Do they continue to hike, or do they pause in the next meeting? I think by the looks of that data, could be time to hike again. We looked at the strength meter this week, talked about the potential for the yen to start having a bit of a clawback. We talked about the Swiss franc also giving a little bit of those gains back as well. And that's what we did see this week. And we'll look at the strength meter going into next week as well. Going on to the US dollar index then. So we've talked a lot about the dollar index this week. We held a gold market mastery webinar, and we talked about the importance of this 101 level. In fact, price is kind of trading between 101 and 102 at the moment in a very tight trading range. And after that jobs data, we could see the potential dollar price head up towards the range highs at the 102, and price may stay within that range. Alternatively, the 101 is the key level to watch. If price trades through that level, then the $99 level could be one to watch going forward. A break above 102 would see price head up to the 103s. Aussie US dollar was one to watch going into this week. Again, we felt that the RBA would hold rates at 3.6%. That wasn't to be the case. In fact, they hiked, and that's why we saw the Aussie US dollar price head to the upside above the 0.6575 handle. Again, we're kind of trading within a range here on Aussie US dollar. We've got the 0.68 handle highs and the 0.6575 lows. So price could head up to the 0.68, find resistance, or price could come back to the 0.6575 and find support, unless we do get a breakout of some sorts. So going on to pound yen then, this was one to watch for a pullback this week. We saw price last Friday rally into the 171 spot 50 handle. We thought that was quite an aggressive move, so we did expect a pullback going into this week, and we did get the rejection just above the 171 spot 50 handle, more into the 172, and price pulled back into our areas of support. One of those was the 169, the other between the 168 and the 167.75. So price has now hit that level. Looks like we're getting a little bit of a rebound at the moment, so we could potentially see price head back to the 171 spot 50 handle, and that's something we'd probably take a look at going into next week, considering the fact that we do have a Bank of England rate announcement to come. Going on to our final pair or commodity, it is gold. Like I said, we did the gold market mastery this week. We talked about the 2075 area being a key level of resistance, and that if the dollar does find support at the 101, it could see a little bit of a pullback. That's exactly what we are seeing now, with the price of gold coming back down towards these key lows here, especially in line with that minor range between the 101 and 102s on the dollar index. I think if the dollar index does head to 102s, then the price of gold could be back down towards this 1975 area. So that's all I got for you this week. I hope you enjoyed all the content this week. Got plenty more upcoming, and I look forward to speaking to you next week. Cheers.